Hello, in this video I'll be sharing with you how you can use the upper Bollinger Band and the lower Bollinger Band to confirm and validate your trade entry. My name is Soji and you are welcome to Soji Forex. If you are coming across our video for the first time, please do well to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. I'll run you briefly through the setting of this indicator. First is our Bollinger Band. The period is 130, the deviation is 2.0, the shift is 0. You can take a screenshot and do the setting on your phone. Here is the other one, period 25, shift is 0, the method is exponential. And then we have our moving average, period 25, method exponential, and you apply to close. Then here is my relative strength index. The period is 9. Then you can see the levels. So as for this pixel color, if your background is black, kindly change this pixel color to black. So my background is white, I am leaving it at white. And here are the various levels. So you can tap on this to edit your level. So here is it. A level that you don't have, you can click on this plus sign. So you can add up the level and carry out your editing of the level. Okay. And after that, we have our relative strength index, which I just explained. Then our commodity channel index, the period is 14. And so basically, this is what we'll be doing. We are looking at how we can find our entry using the lower Bollinger Band and the upper Bollinger Band as our entry confirmation. Remember, we have always talked about the middle Bollinger Band. This middle Bollinger Band helps us to determine the trend of the market. But when it comes to entry confirmation, we are looking at the upper Bollinger Band and the lower Bollinger Band most of the time. We also use the middle Bollinger Band for entry confirmation. But in this video, our focus is on how we can use upper Bollinger Band and the middle and the lower Bollinger Band. So please, and then what that means, please take note. When price or when you are looking for a buying opportunity, you will need your lower Bollinger Band as your additional confirmation. And when you are looking for a selling opportunity, you need the upper Bollinger Band as your additional tool for confirming your trade entry. So that is exactly how we will be using this to validate our entry. That does not mean immediately price come to the upper Bollinger Band, you sell, or when price get to the lower Bollinger Band, you buy. That is not what this video is all about. You need a price action, other factors before you can consider this. We are applying this on a 1 hour downward. So now let's do our analysis. Having established all of that, remember we'll begin our analysis by identifying the trend of the market. And we have established that whenever price is below the middle Bollinger Band, we are in a downtrend. And when price is above it, we are in an uptrend. However, the fact that price just break above the upper Bollinger Band doesn't mean we are in an uptrend. We said for this to become an uptrend, we need a validation. And the validation want to see price retest it and get rejected back to the upside. So you must be patient to get that confirmation. So in this scenario, you can see that price did not do that. So let's look at this side. So now we want to mark our point of interest. So our point of interest is this previous order block. Now here is our point of interest. Remember, we say anytime we determine our trend, we need to do what? We need to mark out our point of interest. Our point of interest are those zones that we want to make trading decision of either to buy or to sell. And we say that point of interest can be a support zone, it can be a resistance zone, it can be a smart money cube, it can be a fair value gap, which is also known as improper price action, imbalance. And if you are hearing this for the first time, there is video on this channel where we've talked about that extensively on how you can identify each of these zones. So I recommend you go through the list of videos and you will find that particular videos. Alright, so now price left this zone. Price left here and came all the way to this downside. And after that, we mark this zone as our zone of resistance and as our order block. And afterward, we see price pull back from here back into this zone. So when price begins to move back into this particular zone that we have marked, we move to our 1 hour time frame. So on our 1 hour time frame, you can see that price successfully returned into this particular zone. So now that price is here into the zone, what do we want to see? When trading on a 1 hour, you will need a candlestick formation in order for you to make your entry confirmation. And how do we do that? We want to see either a bullish or a bearish engulfing candle, a pin bar or a hammer. And here we have a bearish engulfing candlestick pattern. So this particular candle you are seeing here is a bearish engulfing candlestick pattern. Alright, so that bearish engulfing candlestick became our entry signal. So immediately you get this engulfing candlestick, the next question you are asking yourself is, where is the price? You can see that price is at the upper Bollinger Band. Okay, so you only use this upper Bollinger Band and the lower Bollinger Band for your entry confirmation. So now price is at the upper Bollinger Band. But remember, the first thing we pay attention to was not just price at the upper Bollinger Band. Look at here. Price came to the upper Bollinger Band here and gave us a bearish candlestick pattern. That is not enough to make that particular entry. Please, one of the significant proof, and I will recommend, is that in as much as you are trading in the direction of the trend, be patient enough to get a confirmation. And the mandatory confirmation to prove that this price has come to an end is, please always wait for a divergence. 80% of it plays out. So because price just tap into that zone, please, just as this one give you a engulfing candle, do not just make entry. You see that it fails, but rather wait for a divergence. So look at this. Here now we have a divergence. So this divergence becomes our additional trade entry. So now we have multiple confluence for taking this trade. 1, a bearish engulfing candle. 2, we are having a divergence. 3, it is happening around the upper Bollinger Band, which shows that price is in an exhaustion. And then number 4, price is happening in our order block and a resistance level from H4. And immediately we spot all of this, we make our entry, and you can see the rest is history. Now again, coming to our 4 hour, after price moved reasonably, price gave us a candlestick formation. Can see this? This actually is a typical, what I refer to as flag pattern. Now this is a bearish flag pattern. This bearish flag pattern now is what we'll be making our next entry on. Okay, so let's look at our 1 hour. This is our 1 hour. This pattern here did not get to our upper Bollinger Band. Okay, in the next video I'm going to tell you how you can use your middle Bollinger Band to validate your entry as well. But for this particular video we are focusing on the upper and the lower Bollinger Band. So now I'll move to my 15-minute time frame. I see that this is my 15-minute time frame. So you can see that price is above my upper Bollinger Band. So we say when price above alone, you don't need to make an entry. And then remember, on 15-minute time frame, you will always need a chart pattern. And here we have M chart pattern. You can see that. And price put to the downside. Please, we always have three types of M and W pattern. You can have perfect M with equal high. You can have another M that the first leg of the M is short but the second leg is high. And then you can have M that the first leg is high and the second leg is short. The opposite is for a W sharp pattern. So here we have an M pattern. That is not the end of it. I say whenever you see that, always get a divergence to show you that that is the end of that play. So look at this. As tiny as that looks, right? You need to train your eye to identify this pattern. Now look at. Let me use a hairline to validate for you to know that this is a divergence. Can you see that? See that high up there? And then see this? And then look at this. So this is a divergence. So you use either that M pattern or price close below this moving average. You make your entry and your stop loss is up somewhere here. Or you can use your trend line. You can connect your trend line and then wait for price to break your trend line. Okay? This is your trend line being connected and then price break through it. You make your entry on a lower time frame. So you can see price at that upper Bollinger Band gave us a short pattern, M pattern, gave us a divergence, as well as at the upper Bollinger Band. And what is our point of interest? Our point of interest in this particular scenario was a bearish flag pattern, and that is how we were able to make this particular entry. And you can see how you can use the upper Bollinger Band and the lower Bollinger Band to validate your trade entry. And I believe that you find this video so helpful. I believe you have learned something new. Please do not forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. Thank you and see you in the subsequent video. We'll be discussing more about the middle Bollinger Band. Beyond using it to determine your trend direction on H4, there is many more revelation around it when it comes to finding entry, and that we'll be discussing in our subsequent video. Thank you and do have a profitable trading experience.